The reason that Apple works is because 1 billion people want an iPhone. Whether the world stinks, whether the world is chaotic, at war or not at war, people still want 1 billion iPhones because the iPhone's a good idea, and it's a better idea than a pad and paper 100 years ago. And the reason Bitcoin works is because I can put all my money on my phone and zap it at the speed of light, and no one can steal it from me, and I get rich.
Bitcoin prices have soared by about 175% in the past year, with around $30,000 of these gains occurring after the U.S. Securities and Exchange Commission approved several spot Bitcoin exchange-traded funds in January. Demand for these ETFs surged dramatically in March, pushing Bitcoin to a new all-time high of over $73,000. During this period, the funds recorded their highest daily net inflows of $1.05 billion and experienced 17 consecutive days of net inflows, indicating robust investor interest. According to senior Bloomberg ETF analyst Eric Balcones, spot Bitcoin ETFs are now experiencing their third wave of super bullish demand, which could potentially surpass previous waves and have a more significant impact on Bitcoin prices. Institutional investors have shown a strong appetite for spot Bitcoin ETFs, leading MicroStrategy founder and executive chairman Michael Saylor to predict a gold rush decade for Bitcoin between 2024 and 2034. On June 4th, the funds saw their second highest daily net inflows, drawing $886.75 million, just shy of the March 12th record. This was followed by another substantial inflow day on June 5th, with combined net inflows of $488 million, marking the 17th consecutive trading day of inflows. In a recent interview, Saylor addressed a common question among potential investors: is it too late to invest in Bitcoin in 2024? He offered an analogy comparing investing in Bitcoin now or in the near future to buying property in New York City a century or more ago. While New York was already the greatest city in North America by 1776, over 100 years after its founding, people have continued to invest and make significant returns for hundreds of years since. Saylor believes the same will happen with Bitcoin, with many buying at various price points and seeing their investments multiply. Now we will share clips from Saylor's interview with Stephen Graham and Jack Selby, hosts of the Iced Coffee Hour podcast, as he provides a detailed picture of Bitcoin's potential development in the coming years.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I think the apex property of the human race is Bitcoin. Bitcoin is Manhattan in cyberspace. If you think about investing in Manhattan as a good metaphor, the question is it too late to invest in Manhattan? Well, was it too late in 1680? No. Was it too late in 1776? No. Was it too late in 1865? No. Was it too late in 1914? No. 1945? No. 1976? No. 2000? No. What is the story of, and why is that, by the way? It's because Manhattan's built on an island. There's a limited amount of land. It's the nexus, the commercial center of the North American trade network or the Western trade network. Everybody with money and power wants to go through or needs to go through Manhattan at some point in time. That's been the case for hundreds of years. Everyone that ever bought real estate in Manhattan bought it from someone that paid less for it than they're currently buying it for, right? Mm-hmm. And why does it keep going up? It keeps going up because we keep printing more currency, right? So scarce, desirable assets go up forever. And in this case, is Bitcoin safer investment than Manhattan? I think so, because Manhattan competes with Tokyo and London and Paris. And Manhattan is just a physical city. Bitcoin is the center of the digital commerce or of the digital economy. It's like the capital city. It's the nexus point of the entire digital economy. And it has appealed to everybody on earth speaking every language. You could think of it as a city that's 276 blocks high, 276 blocks wide, 276 blocks deep. That is the integer cube root of 21 million. And when you're buying one Bitcoin, you're buying just one of those blocks. That's how many there's going to be for 100 years, 1,000 years. No one expects there to be any more. Why is it a useful thing to buy? Because it passes the Bernard-Arnault test. The Bernard-Arnault test says, I have a lot of money. What should I invest it in? I should probably buy something that someone richer than me, more cultured than me, smarter than me, will want to buy from me in 10 years. So when you look at the things you own in your portfolio and you think, will the smart money or will all of the global, intelligent, wealthy class, will they want to buy that from me? And if it's Picasso, probably yes. If it's 25 blocks in the middle of Miami Beach or 25 blocks in the middle of Manhattan, probably yeah, right? If it's the Magna Carta, probably. Maybe it's a trophy asset in the civilization, but Bitcoin is the most popular, most well-known financial asset in the world that is an investment, right? I mean, it's second to the dollar, I suppose, as a pure financial thing. Everybody knows the dollar, but the dollar is not going up in value measured in dollars. So the dollar is only an investment asset for people in economies with hyperinflation. If you went to 10,000 rich families and you said, how'd you get rich? Not by buying dollars. How'd you get rich? Not by buying gold. Now that you are rich, what are you going to buy? Dollars? No. Gold? No. What are you going to buy? A sports team? Maybe. Right? Leonardo da Vinci paintings? Maybe. The Magnificent Seven stocks? Maybe. A Bitcoin digital property? Maybe. The one thing that's for sure they'll say is property.
Michael Saylor's explanation of the fiat currency trap is particularly compelling due to his personal experiences as an investor and entrepreneur. In 2020, following the excessive money printing in response to the COVID-19 pandemic, Saylor's company, MicroStrategy, was sitting on $500 million in cash. Recognizing that this money would continually lose value if not immediately invested, he faced the critical question: where to invest $500 million long-term without succumbing to fiat debasement. Neither the bond market, with its average 3% annualized returns, nor the S&P index, which only slightly outperforms at 7%, appealed to Saylor, as both barely kept pace with the dollar's annual debasement rate. Saylor's quest for a truly scarce and immutable asset that would outperform traditional investments and significantly outpace the rate of fiat debasement led him to Bitcoin. Since MicroStrategy's initial $250 million investment in Bitcoin, the Virginia-based firm has acquired over 214,000 Bitcoins at a staggering purchase price of $7.53 billion. During his discussion with Graham and Selby, Saylor compared Bitcoin with other assets like art pieces and real estate, emphasizing why nothing else comes close to the leading digital asset. In the interview, Saylor delves deeper into these comparisons, highlighting Bitcoin's unique advantages and explaining why it stands out as a superior investment. Here are more clips from his conversation with Stephen Graham and Jack Selby, hosts of the Iced Coffee Hour podcast, where Saylor paints a detailed picture of Bitcoin's potential and its role in the future financial landscape.
Beachfront real estate is the closest conventional idea to a scarce desirable asset that the politicians can't make more of. What is it the government can't print more of? They can print more bonds. Mm-hmm. They will issue trillions of dollars of bonds. They can print more currency, so don't buy that. Corporations can manufacture more Hershey's bars and more Kellogg cereal and more, Netflix can stream more videos. Mm-hmm. Right? So anything a company can create more of in a factory you don't want to buy, anything an AI can create. Yeah, you want to buy, art rights. Well, if the AI can generate infinite free art personalized, then those rights might not be worth anything. So you don't want anything a robot can do. You don't want anything an AI can create. You don't want anything a manufacturer can create. You don't want anything a politician can create. You ask the question, what's the thing that's least likely to be taxed or expropriated, seized from you? Bitcoin's interesting and beachfront property is interesting, but beachfront property it's illegal to buy it in certain countries. In the UAE, you couldn't buy it if you wanted to. You have to be a member of the royal family to buy it. That's actually a law. In Florida, the beachfront property comes with a 2% property tax. So that means that you can buy it, but you're going to have to come up with an equivalent amount of cash to pay the tax to keep it for 30 years. But another way to say it is, over 30 years or 20 years, the state's just going to take it away from you. So maybe you want to buy some floating property that doesn't have a 2% tax on it. And the advantage of Bitcoin is maybe Bitcoin isn't property in Florida, but you can buy beachfront property in Wyoming. I guess you can't, no, right? So how do you move your beachfront property to Wyoming? Tricky. With Bitcoin, you can actually move your Bitcoin from Florida to Wyoming. And in the worst case, you could put it with a custodian in Singapore or Monaco or London, right? Carry it with you. So it's less likely to get a property tax. If you own the best building in a country where there's a coup d'etat, they're taking your building. Like look at what happened to everybody that owned property in Cuba. Castro took it all, right? And so you're asking the fundamental question, why do I think Bitcoin will keep going up? Because every other investment is being diluted. It's either being mismanaged. You know, like you want to buy Kodak stock or Xerox stock? How'd that work out for you, right? Either your competitor destroys you, the management team destroys you, or it gets unionized. What happened to, if you buy a car company, it gets unionized and then it gets bankrupted by the union, maybe that wasn't a good investment. So companies have tariff risk, union risk, competitive risk, tax risk, execution risk, nexus risk. Alibaba was a good company, but maybe they can't do business in the US, right? So did you want to put all your money into a company that'll get banned in the country you live in? That's the challenge there. All of that stack of risks, you can easily say that adds up to about 7% per year. If the return on the S&P index is 7%, if I could get the risk to go away, the return would be 14%. And so that's what we call equity risks. And there's a bunch of them. But if I go to property, real estate, maybe the real estate gets rent controlled. Maybe the real estate gets taxed. Maybe the tax increases. Maybe the real estate is struck by a tsunami. Maybe the real estate rusts. Maybe the real estate the neighborhood goes bad. Maybe people stop coming to the city, right? You had the best real estate in a city that died because the industry died, right? Maybe the country fails. Maybe the state fails, right? Real estate, in theory, is scarce desirable, but we can make more land. Half of Miami Beach is all just man-made. Half of Boston is man-made. Look at Emirates, a lot of man-made stuff. Go to Monaco right now. If the value of your land goes up too high, they just build out and they'll reclaim the ocean. The entire airport in Hong Kong's made on reclaimed land. Yeah. So even land itself isn't truly scarce. And of course, ultimately, there's plenty of real estate in the world. I mean, if you fly over the United States and you look down, you'll notice that 98% of the country is not occupied. Land doesn't make a good treasury asset.
In related news, on-chain Bitcoin analyst Willy Woo believes Bitcoin is on the verge of reaching new all-time highs. In a post he shared on the social media platform X on Wednesday, he stated, tapping $72,000 is the fuse that is set to start a liquidation cascade. $1.5 billion of short positions are ready to be liquidated all the way up to $75,000 and a new all-time high. Anonymous Bitcoin analyst Plan B is also optimistic about Bitcoin hitting new all-time highs and potentially reaching 6 digits in 2024. One of his recent posts on X reads, "My forward guidance for 2024 and 2025 has not changed since October 2022 when Bitcoin was below $20,000. I predict a rise into April 2024. Aligning with the stock-to-flow model value of $55,000. After the halving, Bitcoin will cross $100,000 in 2024 and hit the stock-to-flow target of $0.5 million in 2025, with a range between $0.25 million and $1 million. Plan B's first 3 targets have been hit. Do you think Bitcoin will reach $100,000 before the year ends and $1 million next year? Please share your thoughts and comments on Saylor's interview in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.